Hey, everybody. Welcome back to the Real Estate Success Podcast. I'm your host today, Jim Ingersoll. We've been rolling this podcast for a couple of years now, and it's been our pleasure to host it and be able to help other real estate investors around the country from coast to coast, from the South to the Midwest, create cash flow, lasting equity, and enjoy all the benefits of investing in assets. And that's really the topic that we've got today with our very special guest, Chris Salazar, from the beautiful windy city of Chicago, Illinois. You're going to want to take a lot of notes. And this is especially great for the younger people that are in our crowd because Chris is a younger guy, which I love. We've had a lot of millennials on our show, and it's great to see the young folks jumping in and doing well. If this is your first time checking out our podcast, I want to give you a big, warm welcome. If you're a returning visitor, thank you. Thank you again for those that leave reviews, share our content, leave us comments, send me emails, all that good stuff. We really appreciate you guys. You guys are the top success listeners in the country, and we love you all very much. Thank you very much. Chris, welcome to Real Estate Success today.
Jim, thanks a lot for having me on. I'm really excited to be here.
I'm excited because you're so young, but let me tell everybody a little bit about you also, because you've done a lot already, even though you're still a young man. Chris is the co-founder and a partner at Arsenal Properties. It's a real estate investing firm based out of the beautiful city of Chicago, Illinois. Chris started the company right out of college just a couple of years ago in 2016 at the age of 22. So those of you folks that are thinking, man, I'm just getting out of college at this time of the year, I'm not sure what to do, I'm thinking about jumping into real estate, you're going to love Chris's story. Since then, in the last 2 years, he's already grown the portfolio to over 100 units, which is amazing, and is controlling $7 million of assets that quickly. Chris's company also develops student housing complexes and currently is in the process of building another 68-unit student apartment building on the campus of his alma mater, right in beautiful Rock Island, Illinois. Chris's focus is on value add and opportunistic investments in the secondary and tertiary college markets. Chris, how did you get started in all of this, just coming out of college 2 years ago?
Yeah, so I went to school thinking I was going to be a CPA. I studied accounting and finance at Augustana College, which is in the Quad Cities, and that's the market that I stuck in. So, instead of going to a lot of my classes when I was a junior, I was on spring break, actually spring break sophomore year. All my friends were out vacationing. I was reading Rich Dad, Poor Dad, and that's a book that really got me onto investing and shifted kind of my mindset from there. So it was really, from there, I found Bigger Pockets and a couple of other, forums online. And I just started learning as much as I could, listening to different podcasts and really taking in all the information. I loved it. And I was cutting a lot of class to learn it and, really spending all of my time on it. So I learned wholesaling pretty quickly. I did my first wholesale deal when I was 20 years old. I flipped a small duplex by my college. And then from there, throughout the rest of college, I started the Real Estate Investment Club at my school. And then I built a lot of connections and, built a lot of relationships in town there where I went and, just started to really fully dive into it. So I did an internship with a CPA firm in the suburbs of Chicago somewhere after my junior year. And I was actually the only intern to not get a full-time offer because I just wouldn't shut up about real estate. I was always talking about real estate. And my partner told me, you know what, go do something into real estate. You clearly don't want to be here. So that's what I did. And so after college, all my friends moved back to Chicago. I stayed out about 3 hours west in the Quad Cities, which is Davenport, Iowa, and the surrounding suburbs there, and learned from a guy who flipped 20 to 30 deals a month. Wow. Learned his business and kind of just, worked for him for a few months and then went out and did it on my own, partnered up. And, ever since, we've kind of been growing really pretty nice portfolio and looking to definitely grow it pretty substantially in the next several years.
So you started off doing one deal at a time, one house at a time, one duplex at a time, and then you learned how to do that really well. You chose your people carefully, and I could tell you invest in your network as well. But now you like to do like a whole bunch of doors at once.
Yeah, I definitely like the model of bigger scale. I mean, the single family stuff, you've got pretty good margins, pretty good cash on cash returns generally on that stuff. There's the market's a little bit tighter right now. So I really just take at this point, any opportunities I can get, whether it be single family or multifamily, or, now I'm doing a student development deal ground up. So that's kind of really exciting for me, but really just more opportunistic than focusing on, I guess, one specific asset. But definitely residential is kind of my focus.
That's awesome. All right, so let me divert a little bit because I love the view behind you. You got the beautiful Windy City right out your window, right? Where are you at right now?
Right now I'm in Streeterville, which is actually half a block down the street from Navy Pier here. So.
Navy Pier. I bet you love that location, don't you?
It's great. I get to go to the beach here quite a bit and enjoy especially the summers. I love them. So.
Well, like I was telling you before we started here, I'm coming to that area in late July for the Community Go-Giver event in Gary, Indiana, and I'm going to spend some time probably in that Navy Pier area. I think it's a lot of fun, and Chicago's a great city anyways, so having that as a backdrop would certainly motivate me to get out there and do units. Think of all those units behind you. If you guys are watching this on YouTube, you know what I mean. Right, Chris? There's a lot of units back there.
There are, and there's a lot of buildings going up. I think there's 40-some cranes in Chicago right now. And so, to see all that kind of development is pretty inspiring.
I bet. So take me through your transition over the last couple of years. I think it's awesome that you started when you were in college. I have two daughters that are about your age also. I help them get started in college, but a lot of people that are young think that they've got to have, that it's complicated, that they have to get out and work a 9-to-5, that there's no other way to survive. And they need, that warm, comfy corporate America thing, or it takes so much money, or so many excuses why they don't really quite jump into real estate like you did. What advice would you give other people your age that are thinking about this? The wheels are turning, but they're just a little fearful of doing it.
Yeah, I mean, people have a lot of limiting beliefs when it comes to that. I mean, they have, all these things in their head saying they need a ton of money to get started, or, whatever. But I think the most important thing is you can sit and read books and listen to podcasts all day, but until you go out and actually get the experience, you're going to be doing the same stuff. So I would just say, take as much action as possible, whether it be, for me, my first step of action, I guess, when I was 20, I put about $3,000 of direct mail, on my credit cards. So that was my first step. I mean, I just went for it. I didn't even have any income or anything like that, and so that was a big risk. So
did that work?
Sort of risk. Yeah, it ended up working out, and so thankfully. Otherwise, I don't know. But even if I would say, if I would have screwed that up and it didn't work, I still get back up and keep going after it. So, I think it'll happen for a lot of people. So they'll make plenty of mistakes. Everybody will make mistakes, but how you react to that and how you respond is what's important. So.
That is awesome. Okay, so tell us a little bit about your first apartment deal. You've got over 100 units and you've got over $7 million in assets at a very young age. Tell me about your first one.
Yeah, so my first apartment deal, so we bought about 60 units of 1 to 4 unit properties before I actually bought my first larger complex. We closed on this first apartment complex. It's 20 units, so relatively small. So we bought it back in November. So it's in a C-class area. Yeah. We saw an opportunity to push rents and to, operate the thing better. I think the previous owners were living in Green Bay and they were managing it, in Davenport, Iowa. So the management was pretty poor. So we saw an opportunity there as well, along with increasing rents. so from there, acquired the property for, I think, $740,000, put about 160 into it. So we're into it for 9,000. We were able to create around 500,000 in equity in that property just from raising the rents. So we're grossing about, around 200,000 from that property. So at a 8.5 cap, that's what the market is there. It's valued at like about 1.4 million. But that was a pretty good, that was a good start. It's actually not a full 20 unit. It's 5 fourplexes that are all in line.
Okay.
So just went in, did some cosmetic updates, new kitchens, new baths, new paint, new flooring, and, updated the units, got the previous tenants out and kind of changed the perception of that area. So it turned out to be a nice little project for us.
And where's that located again?
That's in Davenport, Iowa.
Okay. So how far from Chicago is that?
We're, the Quad Cities, it's about 3 hours west of Chicago.
All right. So, and that is a great point to make, because you don't always have to invest, like you're right by the Navy Pier. You don't necessarily find the best deals right there.
Yeah, I don't find any deals around Chicago right now. It's pretty tight, pretty competitive. And, for people starting out, I would say, when I have friends or people that ask me, when they're just getting started, get into the smaller markets where you can compete with less money. And, there's people that aren't, the most sophisticated, so you're not dealing with, killers and, guys who are just, full-time, big commercial real estate guys. You're dealing with more mom and pop shops and more, it's a lot easier environment to win in starting out.
Yeah, and I think that's great. And don't be afraid of going a little bit away from your house, I think is good. Right. How did you sort of build up your business network in Iowa when you live in Chicago? Like, how did you get your contractor base? How did you figure out your financing and things like that?
Yeah, so I built all those relationships before I moved to Chicago. So I moved here just about actually a year ago. And before the year prior, I lived in the Quad Cities. So I just, built those contacts over time. And actually the guy who, my main lender is actually the first guy I had speak at my real estate investment club meeting that I started when I was 20.
Awesome.
So I've been building that relationship since, and now they're about to finance, the ground up development that we're doing as well. So it's been a good relationship. I have a few other lending, bankers that I work with out there. And now, also kind of expanding to Chicagoland, making contacts here as well, for when we want to expand and to do bigger projects.
So are you like 24, 25 now?
I'm 23. I'll turn 24 next month.
Awesome. Okay. So it's 23. If there are other people in their early 20s trying to figure out like how they could invest in multifamily, but they're nervous about the financing side of it, what kind of advice would you give them? What do they need to look at raising private capital in a fund? Do they need to look for seller financing? Do you want to build strategic relationships? All of that?
I would say all of it. Yeah, definitely. The first and foremost thing you need to do is understand the numbers, understand, what a good opportunity looks like. Yeah. What a deal is. So, without that, you can have all the capital in the world, but it's never going to do you much good. So
describe what you consider a deal with some upside opportunity. With multifamily, I like to find something that has fixable problems and upside. But
yeah, I like to see, a pretty poor operator generally. First, I look for an opportunity to raise rents. So if there's an opportunity to raise rents, I dig further. From there, I kind of analyze the income statement, look at what their operating expenses are and if those can be lowered. And then, from there, evaluate the IRRs and the cash on cash and all of that in my model.
So you don't jump into right off the bat cap rate, for instance.
I look at cap rate, but there's a lot that doesn't tell. The cap rate is a good indicator, if you're purchasing it at a good price, I think, but there's so much more to that than the cap rate. Yeah,
no, I agree with you. And there's a lot of things that drive the cap rate, like under market rents or vacancy, right, or poor manager on site, or just improvements, if they have deferred maintenance and things like that.
Sure.
So once you've got a good property, how would somebody in their mid-20s, a millennial or whoever, go about trying to figure out how to fund it? All right, so they've got a great deal, but it's $1.4 million or whatever. How would you recommend they proceed?
To proceed, I would just say find somebody. I mean, I've, for example, with my partner, so our situation is, we are, we're 50-50. He funds everything. I do all the operating. I would say, find somebody within your family and friend group, and build a relationship over time. This guy, my current partner, I was meeting with him since, I was 17. I'm really good, friends with his daughter and our group of friends. And throughout that, that time, I've made it a point to build a relationship with them, and it's worked out really well for the both of us. So, I would say, find somebody who has some extra cash, that you think, or, I don't know. There's so many different ways to do it. That's the way.
No, but I like where you're going with that, actually, in a lot of ways, because I talk a lot about on my podcast about networking and in building your network. We talk a lot about what we call our financial friend network, people that you do life with, that you legitimately enjoy being with and become friends, but also can do deals together and support each other in growing capital and things like that.
Yeah.
So you're describing like a partnership that you created with him where you do all of the heavy lifting, so to speak. So you're finding the deal, you're running the rehab, you're repositioning, you're renting, you're increasing the value. And he's sort of like, I think, your financier partner, that he'll provide you with funding so you don't have to worry about that and you can focus on the growth. But then you guys come together and you share the proceeds as well.
Exactly.
So is that kind of how you've worked it over this time?
Yeah. So that's how I've, done it so far. I haven't, got into the point where I'm sourcing larger deals where I would need, a significant amount of capital. Right. So, I haven't come to that point yet. I'm excited to, and I'm sure it'll be a huge learning experience.
Are you using any bank financing?
Yes. So a lot of the, how we started when we were buying some of the smaller stuff, we'd buy the properties cash and then we'd buy after they're stabilized.
Oh, yeah.
Recently, on the apartments. So right now we have 220 units, and then we've got this ground up development. Those will all be leveraged up front.
Mm-hmm. Excellent. So sometimes he'll put up the money. You basically do the Burr method, so to speak, where you buy it, rehab it, rent it, and then you'll refi him. He'll get his money back. You can go use that, redeploy that into another apartment complex if you like.
Yep, exactly.
And that's worked out pretty well. So you've done a lot in 2 years. A lot. That's a lot of units in a couple of years. What are your goals over the next, 5 or 6 years? Like when you hit 30, where do you plan to be? I don't think you're going to retire.
30, I don't think I'll ever retire. I love what I do.
Same here.
Yeah. So but so far, I haven't looked, that far into the future. Mm-hmm. What I always have wanted to do is, that's why I moved to downtown Chicago, because I love these buildings. Yeah. And I want to develop and put stuff like that together. Obviously, it takes years and years of, expertise to build up.
And network.
And especially network. So I'm excited for that. But in the near future, I want to grow, what we have to 1,000 units by the end of 2020. That's
exactly what you want. Goal. That's good.
Yeah. So that's my goal for Arsenal Properties. And then I also want to start getting into the development world where, I'm doing student developments for probably the near future in smaller college towns where there's a high demand for a luxury product. And these a lot of these smaller schools don't have the facilities that these larger schools have and can capitalize on. So providing that product and, filling that void, I think would be, I think there's a big opportunity there in smaller markets for that.
So you really like the student housing niche?
Absolutely. So, at least so I went to Augustana College. Yeah. My school, most of the seniors are the only class that can live off of campus. So that limits, our 68 unit that we're building to, we have a pool of about 650 students, pretty small school, but the majority of the seniors are living in pretty poor, substandard housing. And, there's no kind of luxury product for the senior class on the market. So, there's a big demand. And I see that, and when I research other small schools like that, the senior class or the graduate students have to put up with pretty poor housing and that kind of situation. So, I see a big opportunity there.
Chris, I've looked through your website and your portfolio, and your photos are really nice. They're not scummy places to live. They're legitimately really nice housing. You got granite countertops, you got ceramic in your baths, you got ceramics on your floor. I mean, they're nice. And I think it's good that you're not like shortcutting that, because I think going to the higher road is a better strategy, and you'll get better rents. You'll be able to achieve higher values. And I guess that's sort of your vision, right?
Right, exactly. I take a lot of pride in the work that my contractors do, and the work that we can provide to the public. And I really believe in providing a really strong product. And there's so many people, smaller investors specifically that want to cut corners and just to try to save a dime. But I think the value you provide is the value you get back. So I really like to put that product out to the market. That's
great. And for all of our success listeners right now, if you want to write the website down, you can check it out. You'll see exactly what I'm talking about with this portfolio. It's at arsenalpropertiesllc.com. And Chris, that's ARSENAL propertiesllc.com, right?
Yep.
And if somebody wanted to reach out to you and get more information or connect with you in the Chicago or Iowa or from wherever, what's the best way they can do that?
I've got my website at chrisjsalazar.com. So chris@chrisjsalazar.com is my email. Or, I have my phone number on there as well. So I'm really available, and I like to talk to, people, especially getting started, and really help them, kind of move forward.
So chrisjsalazar.com, arsenalpropertiesllc.com, or just email you.
Yep.
Any of those are fine?
Yep.
All right. So you haven't been doing this real long, but if you were to look back over the last 3 or 4 years, is there anything you would have done just a little bit different? You've had a lot of success really fast.
Yeah, I want, I think I would have done differently is not being so aggressive on some of my purchases, and kind of taking a step back to make sure my foundation was strong enough to, support all the growth. There were a lot of times where, for example, the first month, even we bought 8 or 10 properties or something that first month, and I didn't have the systems in place at the time to manage all of those rehabs and all those contractors. And, that was a really, really big learning experience. And I went through several contractors really quickly, and, just so if I was more methodical about getting started like that, I mean, it would have been better. Definitely.
I think that's a great tip, and it's very you're being very upfront about that, and I appreciate that. I think that is a great tip to take away. At the beginning you mentioned you like to read Rich Dad Poor Dad. Do you still continue to read?
Yeah, I read quite a bit. So, and I like listening to the audibles when I work out and stuff like that. So I read, anything from real estate. I'm a big Tony Robbins guy.
Yeah, me too.
I like Tim Ferriss. I like, stuff that's, not necessarily motivating, but just, it just kind
personal development.
Yeah, personal development.
What have you been reading and listening to lately?
Recently, I've been reading Tribe of Mentors. I just bought that.
Tim Ferriss, yeah.
So that's really awesome. And then actually the audible that I've been listening to is The Way of the Wolf. It's a Jordan Belfort book.
Excellent.
But just, motivating stuff and really good sales techniques and tips in that book.
What podcast do you like to listen to?
I still like the Bigger Pockets podcast. I really like Joe Fairless, the podcast a lot. I mean, they're quick and they're to the point. So Joe's
a good guy. He's an apartment guy like you, right?
Yeah. I met Joe back in
Uh-huh.
February. I went to his event in Denver. It's a great
Excellent.
experience and picked up, a ton of great information. So,
Yep. So you like Joe Fairless, you like Bigger Pockets. Any others?
um, I
That's enough, right? Between that and your Audible and reading. You like
yeah,
going to live events as well?
I do. I mean, I think there's I might not always get the most information at some of those things, but you meet really great
That's
people.
the key, isn't it?
Yeah, absolutely. And you continue those relationships, and, guys that you connected with, a few years ago could definitely be relevant in the future. And it's just, it's great to hear other people's experiences and, learn from them. And, that's what it's about. Real estate is a relationship business,
For
as you
sure.
know, and I think why be in the business if you can't work with people that you like and
Mhm.
people that have the same
What are
mindset.
some of the events you've gone to over the last couple of years that have made a bit of an impact, or you met somebody key that was able to come back and help you out?
Yeah, so I started I went to Sean Terry's event a
Uh-huh.
couple of times in Phoenix. Met some really great people there, and recently I went to Joel Block's event. He's a hedge fund symposium. It's called that's in Vegas, and then I went to Joe Fairless's in Denver. So
Excellent.
those are the recent ones. I'm thinking about doing the real estate guys event that they have, I think, in Florida.
Mhm.
So next year, but yeah, I mean, definitely. And then of course, local meetups, things like
Right.
that. Um, so
Okay. Well, Chris, I want to respect your time. You've got a lot of deal flow and a lot of stuff going on. And that view behind you, I love it. It's awesome for those of you guys watching this on YouTube. But I really appreciate you being my guest today. And I hope that everyone checks out your websites at arsenalpropertiesllc.com and reaches out to you and connects with you. I've really enjoyed having you on. You've got a very inspiring story for all the young people and all my young listeners. So I really appreciate your sharing it. I'm super excited and happy for you for getting all this done in the last few years.
thank you, Jim. I really appreciate it, and thanks again for having me on.
All right, that's it for Real Estate Success Podcast. I'm your host, Jim Ingersoll. Go to my website, investingnownetwork.com. Be sure to download my free gift I've got for you there. And be sure to reach out to Chris. He's got a lot of amazing things going on, headquartered out of beautiful Chicago, Illinois. And thanks for those who share content, leave us comments, and all that great stuff. You guys are awesome success listeners. And hope everyone has an amazing day and gets some really great deals flowing to create the cash flow and the equity for your future.